Yo, what is going on, everybody? In today's video, I'll be going over premium and discount, and I'll be going over how I draw them, what timeframes I use them, and how I basically use them for executions as well. Equilibrium is what it's also called, by the way. But equilibrium is very important for especially my continuation model, and overall, basically my higher time frame bias as well. So without further ado, is what they say. Let's just get into the video. So let's start with bias and EQ, how it kind of aligns. I usually like to draw my EQ. Let me just show you how I draw them first. So let's say right here, in this trend right here, bang, 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 I just want to basically draw it from this swing low, bang, all the way to the high. This is pretty much it. This is pretty much how I use it. And also, like in this case, right here. But we're also gonna be talking about equilibrium legs, because they are also very important for my continuation model especially. But yeah, this is just how you draw the higher time frame EQ of a range. It's just from the low to the higher. So what I wanted to talk about was bias. Let's say in a case where we are like extremely overextended, bang, 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 bang. Let's say we are like extremely overextended, and let's say probably I use them more as a higher term from drawn liquidity. I could also say that. And let's say we are bouncing, and we just recently got into a higher time frame fair value gap, and we get a nice reaction of it, like this, bang, bang, and we kind of like broke structure or whatever you want to call it. Whoops. Let's say we broke structure here. Then I want, before longing again, I would like to see us rebalance our EQ of the higher time frame range. So my initial drawn liquidity and like daily bias in a case like this would probably be bearish. And then if we get a nice reaction of this, maybe we inverse a fair value gap or a higher time frame fair value gap or some shit like that, I would obviously be looking for longs again. So yeah, this is pretty much it. You can use it as a drawn liquidity because we also know the price tends to seek discount and premium of a range as well as inefficiencies and liquidity. So yeah, that's how I like to, figure out my bias with EQ. There is so much more to bias, but this was just a short, comment about EQ and bias. For example, today we could maybe come up and we swept out this liquidity right here. If we then maybe invest this gap, I could be looking to longing up to EQ of this range, see how we react of it. If we react bearish, bang, then my bias is bearish, most likely. So yeah, that's the main idea about bias plus drawn liquidity plus equilibrium on the higher time frame. Alright, so when trading my continuation model, I like to use the equilibrium on the 5 and 15 minute time frame, and here I specifically look at the legs. Like this could, for example, be a leg right. Let me see. Yeah, this is a leg right here. Bang. And in this case, I would draw equilibrium of the leg only, not the whole entire move down, because this is actually some source right here, because we already stabilized EQ of these ranges right here. As you can see, this leg we stabilized EQ, proceed down. This leg stabilized EQ, proceed down. This leg, yeah, really stabilized EQ, leg down. This leg right here, already stabilized EQ and proceeded down. And let's say we are in let's say we are like right here. Then I would draw it from this leg all the way here, and I would just wait, if my bias is bearish obviously, and wait and wait and wait and wait, and here we go. Now we touch it. Now I can be looking to short this leg. And what does price do? Bang. This is how I use them as my legs, in legs, and that is also very important. Sometimes it stabilizes, sometimes it doesn't stabilize the leg, but I mean, that does, in this case right here actually, it doesn't really stabilize this leg right here. What do you expect then? For it to come and stabilize this leg right here and get a nice reaction from it. It also did that right here. In some cases it also just really doesn't stabilize it at all, but the main idea is that we need to stabilize EQ of the lower time frame before proceeding to the upside or downside. In this case, because we have a bearish candle right here, I would draw my Gann box from this low to this high right here, and I would wait for us to retrace in to EQ of the range. But you can see we never did that, so I don't want to take a trade within this range, and this is now an unstabilized EQ. And if we draw it further, what does price do? If we are up here, and let's say now we have stabilized the higher time frame EQ, I could be looking to shorting down to the unstabilized EQ. It's very simple, but it's effective as fuck. And let me show you how I use them in my continuation model as well. So I'll just write a quick example. So in a case like this right here, let's look at the 5-minute time frame. We are obviously bullish. We are bouncing off this 5-minute Fibonacci gap right here. We swept a bunch of sell side liquidity right here, and we are probably going into a market maker buy model. So in this case right here, I would draw my Gann box from this low. This is the lowest low we got, and all the way up here. And I would drop down to and I would actually, wait a second, I would look at this time frame, 5 minutes time frame still, and see if we have a fair value gap that we can align with our EQ. And we do have this one. Do we have a 15-minute? We also have a 15-minute which aligns perfectly with EQ of the range. So now I would just wait. Actually, this is going to be a little higher. I would wait. Okay, we got down, stabilized EQ. Now I could look for an entry. Preferably, it needs to touch this 5-minute Fibonacci gap as well, so it doesn't so we don't leave it unmitigated. Do we do that? Yes, we do. Now we could be looking for longing in here. Let's see if we get a long. Yeah, okay, we get our 1 minute long right here. You could just take this, bang, and it plays out. This is my continuation model. So yeah, I mean, I explained EQ a little bit more in depth. I think it's really important for you guys to notice the pattern when we stabilize and when we not stabilize EQ as well, because I told you that price also wants to stabilize an unstabilized EQ, as what I have noticed. But yeah, so in a case like this today as well, we might want to stabilize this EQ right here because we left it unstabilized. But that'll be it for me. If this helps you, leave a like or some shit. Free live trading in my Discord, link below. Hope you enjoyed the video. I'll see you in the next one. Wait. Okay. I'm not quite sure if I explained this properly, but on the higher time frame, we obviously want to look for if we are in premium or discount of the range. In this case right here, we are in heavy discount. So what would I look for today? I would probably be looking for longs. Okay. And on a day like this, where we are in this area right here, or maybe like up here or something, we are in heavy premium of the range. So I could be looking for shorts. In a case like this, we tap the EQ of the range, I would be looking for longs. In a case like this, we tap the EQ of the range, nice reaction, I would be looking for shorts. Yeah, if we tap EQ of this range right here, if we get a nice reaction, I would be looking for shorts. Just to clarify for you, I don't know if I said that right in the previous. This is the same video, but yeah, you get me. Thanks for watching. Bye.